What in the wide, wide world of sports is going on here?
I don't know what it is, but it's phenomenal.
All right, people, we're going to try something a little different today.
I cannot solve your problem, sir. Only you can.
Am I missing something?
You want answers? I think I'm entitled. You want answers? I want the truth! You can't handle the truth!
Don't mess with the bull, young man. You'll get the horns.
The reality is, humans are humans are humans, and that's never going to end.
No, I do mind. The dude minds. This will not stand.
It's a big, big deal.
Hello. You speak English, sir? Parlo usted English?
60% of the time, it works. Every time.
I've done the math on this. We've talked about it on this show before. That's a fact.
You'll learn a little something about yourself.
That's us, dude.
That's why we're radio shows.
That's right.
I don't have to tell you things are bad. Everybody knows things are bad. The dollar buys a nickel's worth. Shopkeepers keep a gun under the counter. Punks are running wild in the street, and there's nobody anywhere who seems to know what to do, and there's no end to it. It's like everything everywhere is going crazy. I don't want you to protest. I don't want you to riot. I don't want you to write to your congressman because I wouldn't know what to tell you to write. I don't know what to do about inflation and the Russians and the crime in the street. All I know is that first, you've got to get mad.
Let's do this.
Discussing issues that matter to you. Finding real answers using logic and reason. KLZ 560 presents Rush to Reason. Now, here is your host, John Rush.
I'm your host, John Rush. Rush to Reason, KLZ 560, Denver's Afternoon Rush. We've got Kurt Rogers joining us now. Dan Meurer with us today, as he always is, unless he's out eating turkey or something.
Turkey and
Stuffing.
banana bread and stuffing and pizza.
Bread.
Pie. That's what I was doing when I was gone. But now that I'm back to my diet.
You're back on it?
Back on it.
You can't yo-yo, though, Dan.
Hey, I tell you what. No. Okay, I was gone on vacation, granted. Cheated. But now, she's got, good grief, she's got crescent rolls out there.
Yeah, my wife brought those. Or had me bring
Croissants,
those.
and then crescent rolls or croissants? Whatever.
Croissants, whatever.
They're
oh,
awesome.
Charlie's got them right here.
Yeah, Charlie's got them.
Charlie's got them all, and with his brother.
And then the banana bread. And I stayed away from it.
I know, and it's hard for me to do that. I love that stuff.
That stuff is so good.
So she was actually going to take the rolls and toss them. I'm like, oh, no, those will get eaten.
Oh, they'll eat them. Charlie will eat them.
So I brought them with me.
Guys will always eat them.
Oh, exactly. It's like
Give me some butter, I'm good.
Off we go. That's exactly right. All right, Kurt Rogers joining us. A lot of conversation, Kurt, going on. I heard even folks this morning talking about it. Feds, Janet Yellen saying, yeah, we're going to see some steadily increasing rates. I'm not sure how Janet Yellen can say that because she's not going to be in charge forever. But anyways, that's the thought.
It seems to be the topic. Everybody's kind of worried about it. But when the Feds talk about raising the interest rate, they're talking about raising the Fed's fund rate,
right?
Which
short
affects
terms,
prime,
right? Okay.
Which is strictly on short terms. That works on car loans, credit cards, those kind of loans. It doesn't really affect the mortgage. In 2008, prime was at 2015. We've had prime at 3.5. From 2008 to 15, prime's been at the same rate, so it's moved up. In 2016, it went up a quarter. 2017, it's gone up a half. It's probably going to go up another quarter. So it's moving. But if you look back to all the way to 2006, prime was at 8.25. So in less than 9 years, it's gone all the way down to 3.5 and come back up to maybe 4.25. It's still considerably less. Does not affect the mortgages near as much as most people think.
Where do you see things headed? I know you don't have a crystal ball. Nobody's going to hold you to it. I'm not going to hold you to it. But where, what do you hear out in the industry? What's the talk as to where rates are going to go?
We probably anticipate rates by the end of next year will be anywhere from 4.625, 4.75. 30-year fixed
still
mortgages.
Really good.
Yeah, that's really not bad. If you look at the history of like we've talked before, history of rates in the last 10 years, back in 2005, rates were around 5.5 to 6. It wasn't until 2008 the rates started to come down. The lowest a 30-year fixed has been was in 2013 when it was around 3.25.
Okay.
So the rates are going to go back up, which is not necessarily a bad thing. It's kind of a healthy thing for the economy because it actually allows more lending to be out there. It gets more money in the flow of the economy, which stimulates things.
I'm just looking for examples. I just found a chart going back to 1971. Okay? 1971, they were around 7.5% roughly. Is that right?
That is correct.
Okay? And we all know the late 70s, the Jimmy Carter era, where they went all the way up to
18.
Gosh, I'm seeing 18%. Yeah, all the way. Way up. Really went high. It was not uncommon to have a 13, 14% mortgage back then.
First home I had was 12.5.
And mine was 9.75.
Was not uncommon, and it was okay. But you put that in respect to what were the price of homes then compared to what they are now.
Dan, you still have your math on what inflation? We talked about rent and stuff yesterday, which, by the way, this would apply to probably even house payments because they run very close with rent, or at least Kurt could verify that. But talk to us about
so
that.
This was rent. So 1967, rent was 20% of your income.
Okay.
And in 2017, rent is 18% of your income.
So it's actually less percentage of your income today than it was 20 years ago? Is that what you said?
1967.
Oh, longer than that.
Yeah. So almost 50 some years.
Almost 50 years
Yeah, almost
ago.
50 years ago.
50 years. Actually, 50 years ago.
Years ago.
Yeah.
But you see that across the board because as these things go up, like I said, home prices going up, so does your income go up. I mean, I can't imagine the average income now is around $75,000 for a household. My folks were looking to make 25.
Oh, yeah. In fact, 50 years ago, they probably weren't making 10.
Yeah, it was complete.
Okay, so 50 years ago, average income was $7,300.
There you. I wasn't far off.
When I was in the military, my yearly income was $7,364 a year. So everything is kind of relative.
Yeah.
You know,
Yeah,
we
well,
don't
which
necessarily
shows you
like it,
which
but it's
shows you
relative.
our money value is, we'll get Andy Goss talking, now our money value isn't what it used to be. But to Dan's point, I mean, really what you were trying to say, Dan, was not to knock the money system or anything along those lines. You're simply stating, listen, here's the facts. The amount of money we're spending either on a house payment or rent isn't really any greater as a portion of our income today. It's actually less than it was 50 years ago.
Correct.
The biggest thing that's gone up is healthcare.
Yes.
Healthcare cost might have been 2 or 3%. Now it's running at 20% because there's families that are paying $1,200 to $1,800 a month.
Got it.
For health insurance.
And we can get into that. That's outrageous only because of government intervention.
Right.
Correct.
Okay, so talking back on mortgages.
Right.
If there are people out there thinking, man, Kurt, I've got a 5% mortgage right now. I just don't think it's worth it for me to do anything. Is it still worth a phone call to you to find out?
There are certain factors that determine whether you want to refinance or not. The rule of thumb is if you have 1% drop in a rate, it's worth it. Well, to be honest, if I drop your rate 2 points on a $100,000 loan, it's still not worth it because you're only dropping the payment maybe $40.
Depends on the size of the mortgage,
Depends
right?
on the size of the mortgage. If I have a $400,000 loan, dropping it a half a point, I'm going to save you $250. So you got to look at what's the
if you got a big jumbo
savings.
loan, which we'll talk about in a minute as well, it's even bigger, right?
Yeah. So when you're looking at refinancing, you're looking at what's it really doing for me. What we're seeing today, because home values are going up so much, there's people that are refinancing not necessarily because they're dropping their rates, but they're able to borrow money at 3.875 to either do that home improvement, increase their value, or to pay off that 6 to 8%. Because as prime goes up, those rates are going to go up.
Right.
So where can you get the money cheaper and make it work for
Makes
you?
total sense.
So there's a lot of when you can save anywhere from $100 to $200 a month, you should at least at that point look at it.
All right, Kevin Flesh is coming up next, fleshlawfirm.com. And Dan and I talked about this yesterday. And Dan, I want to focus on this a little more. The majority of accidents that will happen between now and the first of the year are going to come in the parking lot.
Yeah, that's a fact.
I'm
No
not
question
exaggerating.
about
They
it.
will come in the
No, you're
parking
right.
lot. That's where the majority of these fender benders and such come from. And I said this yesterday. There's no such thing anymore as a $500 fender bender. They don't exist, folks. Now, I guess if you're the truck, you're the F-250 that somebody ran into, and you've got the trailer ball hanging off the back, you might be the $500 fix. But the other guy's $5,000.
Yeah, at a minimum.
Because trust me, nothing gets fixed that
And that's
inexpensively.
at 3 to 5 miles an hour.
Exactly.
Have you ever backed out of Costco because you always got people with big trucks and vans, and you got this little car and you can't see?
You can't see.
And the people coming down, they will not slow.
No.
They expect you to understand that they're there.
That's right. So
because I got in an accident that way. I couldn't see anything, and the guy would not stop.
That's right. So if you end up being like Kurt, you got to call Kevin Flesh to make sure you're working through things correctly. 303-806-8886. Find him at fleshlawfirm.com. When you call him, tell him Rush to Reason sent you.
Okay, turn here. Well, watch it. During the moment when you're in a serious car accident, you aren't thinking about who's at fault.
Oh no, what if I never hear my kids laugh again?
You're not thinking about hospital bills or insurance claims.
What if I never hear my husband say I love you again?
I changed your oil. And you're not thinking about police reports or who your lawyer should be.
I never thought this would happen to me.
In the split second when you're in a car accident, you're thinking about the most important things in life. When you've been in an accident, call Kevin Flesh of Flesh Law at 303-806-8886. Kevin will help you determine who's at fault, what to say to the insurance company, and who will help pay for your hospital bills, so you can get back to thinking about the important things. That's Kevin Flesh of Flesh Law at 303-806-8886.
All right, Extreme Auto Repair is coming up next, and make sure that you can drive through winter confidently by making sure your vehicle will go from A to B. You do that by going to Extreme Auto Repair in Parker. They would love to take care of you. And I don't say this enough, but anything your vehicle needs, literally bumper-to-bumper service, they will take care of you. Multiple bays to take care of you. Lots of people there to take care of you. Full towing service. Dennis has you covered. 303-841-1071 is the number. Call them now and tell them Rush to Reason sent you.
Thanks to Extreme Auto Repair, I can stop stressing out about my car breaking down. You see, I don't take very good care of my car because I don't know how. Most of the time, I drive around hoping my car will still run tomorrow, as terrible as that sounds. When it's freezing cold outside, that fear gets a lot worse. Honestly, I just want to know that my car will work. I need someone I can trust to give me a professional opinion about whether or not my car will make it through the winter. Because I listened to KLZ, Dennis Brewster told me he would take a look at my car for free. He'll ask one of his techs to write a report with advice about what I should fix. I want to behave like a responsible car owner. I just didn't know where to start. Now I'll get a clear picture of what I need to accomplish so I can actually drive with confidence. You can be smarter than I was. Instead of vaguely fretting about whether your car will keep going all winter long, find out what your car needs now at Extreme Auto Repair in Parker.
Are you buying your first home? Or are you right-sizing or downsizing for lower maintenance or a lock-and-leave lifestyle? This is Pamela Meyer of Denver Home Navigators with Keller Williams. I can help you discover and reach those goals. This is more than just real estate. It's about your life and your dreams. Call me today for your free consultation at 303-506-0106.
This is Rush to Reason on KLZ 560.
All right, Rush to Reason, Denver's Afternoon Rush, KLZ 560. John Rush, Dan Meurer, Kurt Rogers from Affordable Interest Mortgage, and I should have said this earlier, and I forgot. To get a hold of Kurt, 720-895-0500. Call Kurt, any questions you've got. He would love to help you. He's my guy. He can be yours as well. Jumbo loans, Kurt.
They're more expensive than the conforming.
How many people have them?
About 20% of the people out there have a jumbo loan. And that's because of the way 80% of the loans are this dollar amount or less, so they call them either conforming or conventional loans. That's the same. They're one and the same. Anything above that becomes a jumbo loan. Super jumbos,
what dollar
anything
range
above
are you at now roughly for a jumbo loan?
Say again?
What dollar range are you at for a jumbo loan roughly?
Okay, going into yesterday, anything over $493,350.
Nice round number.
Yeah, again, we're talking averages.
Talking the government here, but anyways.
But that number has now changed.
Okay,
effective starting, they say January 1st, but I actually have a lender that's putting it into effect now. Conforming loan limits now go up to $525 in some counties, but the majority of them are at $453. Now, what that means to the consumer is they're able to borrow money, a higher dollar amount, at conforming loan rates, which are easier to qualify than jumbo. They go to higher loan to values. They'll go to 95% on a conforming loan, where in a jumbo, they'll only go to max of 90.
Got it.
And with the jumbo, you got mortgage insurance. With the conforming loan at the 453 or the 5.25, you're going to be with no mortgage insurance. So what they just did has changed everything, especially for Colorado.
Yeah, I know that jumbo term very well.
Yes, you do.
And I have for like eons.
Well, we're already seeing this. One lender came out and said that they will honor those new rates today, those new loan limits today. So we've got customers that we're looking at buying. You can take a house for $565,000 and put 10% or 20% down and still get the rate around 3.875. But you couldn't do that yesterday. So it really has a tendency to change and help consumers that are in that marketplace, because as we know in Colorado, there's a lot of homes that are selling between $500,000 and $600,000.
Oh yeah,
yeah. I was going to say in our area. Okay, here's a maybe not an odd question, but I just throw it out and ask it. In our area, is it a higher percentage of jumbo loans in our area because of our home values?
Yes.
Okay, I would have guessed that.
Yes.
What's our ratio here?
We're closer to 25 to 27% of the homes are in the jumbo range, which means the customer normally, if you had a $600,000 loan, you might have to put more than 20% down to get that rate.
Got it.
So what this does, it actually helps the economy. It allows us to let our home values keep increasing without hurting us. In some areas, if they hadn't raised it, it would have really killed them. These numbers, they actually have a conforming loan limit as high as $679,000. There are some counties in Colorado, you can go to $680,000 and get the 3.875 4% rate.
Yeah, some of them you kind of need it, though.
Yeah, that's why they're there.
Yeah.
You go to California, their limits are even a little bit higher because the price of homes are there. So that's what you're starting to see.
That's interesting, though. I didn't know that.
So what does it take in a particular area like Colorado for this higher adjustment? How often do they look at that?
They look at it every year.
Okay.
And it's always normally done in October, November. The numbers will come out in November. So they've looked at that.
So they will look at this again next year.
Yeah. Boulder County, you go up into the mountains, you get Vail up in that area, Douglas. There's certain parts of Denver there's just certain areas that county will give you higher limits. Or that at Jefferson. They are one of those areas that those homes have gone up in value. So because of the percentage of homes, they raised that county limit from the 453 to either the 5.25 or the 680.
So it is location specific in a lot of ways.
That's correct.
So if somebody's looking at a house, they're trying to decide what should I do, what should I not do. I'm a big believer in this. Rather than going to, nothing against all the realtors out there, but rather than going and seeing a realtor first, what they really should do is sit down with you and say, okay, Kurt, here's the 2 or 3 areas we've been thinking about buying a home in. Here's our financial wherewithal.
Right.
What can we go do? You could tell them, right?
Yeah. You make a point about your realtors are actually telling you the same thing anymore. Because of the competition, they want you to go talk to a broker to know the numbers before you ever go out looking, because they really don't want to spend the time.
Because they can spend all that time and you couldn't qualify.
Right.
Why waste all that time?
So what we do is, we have a little 10-minute conversation. I kind of call you back and say, okay, you can go here. Here's what your payment needs to be, your taxes, everything included. This is how you qualify. This is what you can go to in this county. This is what you can go to in this county.
Okay, so what's the difference? And I already know this answer, but I want people listening to know the difference. What's the difference between doing that, calling you, spending 5, 10, or even having coffee and meeting with you for an hour? What's the difference between doing that and me going online someplace and plugging in the numbers and trying to get my answer that way?
Because you don't have somebody that asks you the questions to figure out if you're really going to qualify. Because we've talked about that in the past.
I can go to Quicken Loans, for example, fill all their forms out, and I wouldn't know from that what I need to do?
No, not at all. And, because you're dealing with, they're trying to put you into what I call a call center.
Right?
You're like a call center.
Okay.
If you don't fit in this box, they don't want to talk to you, or somebody else will call you
especially
back.
Somebody like me. I'm never fitting in that box.
Yeah. Well, to be honest, most people in Colorado don't fit in that box because there's things about you that may be different. We know Colorado. We know how to find that area that will work for you. Where these folks, they're just look, do you fit in this box? You want this?
Here's the value of the house. Here's what your loan amount's going to be. Here's your income. Do you fit or not?
It's that because they don't have time. They have somebody else on the line that wants to go forward. They don't want to look at you as you're not their neighbor.
Got it. Got it. No, that makes total sense to me. 303-477-5600, by the way. If you got a question for Kurt, call us and we'll get you right on air because there are a lot of things that revolve around this. And by the way, folks, there's no easy – how should I say this? There's no easy answer. So, again, if you think you can go online, plug all the numbers in and get the exact answer you need back, think again. Typically not going to happen.
No, one of the other and you're right, but one of the other changes they made, which if you're an investor, they've just raised the conforming loan limit to $580,000 on a 2-unit.
Okay.
So if you buy a 2-unit and live in one side at $580,000, you're going to get the better rate, and that tenant is going to pay for most of your payment. So I've already passed this out to some of my investors, and it excites them because they can go to a higher limit and make it work for them and make more money because they're getting a lower rate. If you're trying to buy a jumbo under investments, you got to put 25% down. On a conforming, you don't. So it just changes everything about it with these new loan limits.
When it comes to what bank you choose, should people really care, or do they or are you the guy that should figure all that out?
It's my responsibility. They call it a fiduciary responsibility. I am required by law to make sure that I find them the best product that is available. Okay. And if I can't offer it, This is really a good one. I am required by law to tell them what broker can offer it and where to go.
Ah.
So if I can't offer a product that they're looking for,
does fit them,
I have to send them to somebody else.
So let's say, for example, you didn't really do
the asset
self-employed
manager
loans,
Yeah.
or the asset manager,
Yeah.
and yet you knew that's the best product for John Rush. You would say, John, you got to go call this guy because this is the better product for you.
Or if I don't do reverse mortgages. And there's a lot of brokers that don't do that. They'll try to squeeze you into something they have, the online people, instead of saying, no, we don't offer that, but these people do. And that's actually federal law.
Got it.
They are required to do that.
That's not a bad deal, actually. It's a protection for the consumer, right?
Yeah, because the consumer doesn't know what product might the asset manager. When you first talked, you didn't realize that.
Until I
loan
met you,
really
I had no
fits
idea what it even was. Didn't know it existed even.
So when we have those 10-minute conversations and I get this, I say, well, here's a product for you that fits. Right. It's not my job to tell you what product to get. It's my job to show you what's available.
These are the ones that fit you. This is what we can make work. This is what I know I can get you qualified for, so on and so forth. Question for you on that. Has the qualification process changed? Is it harder, easier, about the same? Where are we at with that?
About 3 months ago, it actually got easier. They raised some debt-to-income ratios. They got rid of some of the requirements. Probably 40 to 45% of the homes, even if it's a purchase, don't require an appraisal. So a lot of the qualifying has changed. So with these new loan limits, everything it's allowed you to move up. So it's actually, to be honest, gotten easier. You still have to provide the documentation on what you say.
Sure.
But qualifying is still.
There's no more of a I'm going to put my dog on the deed sort of a thing. You have to prove that you make that money, right?
Yeah.
They want to see bank statements or whatever to prove that money's coming in, right?
Right. If you have a tenant living in your house, the fact you're getting cash, they don't count it. Where's that money coming from?
They want to see that deposited. Where's it coming from? And frankly, in those cases, you probably should be getting checks or at least transfers into your account. Whatever. Cash probably isn't the best way to do that.
Definitely not, because there's people that have got that, and they got the good old buddy doing it, but it doesn't work when they want to refinance because you can't count that income.
So if you're a sole proprietorship, can you get a loan?
Yes.
Do you have to have W-2? I mean, because
no W-2.
Okay, so they go off a bank statement.
Because you won't have a W-2 anyways.
No, you won't.
No, we actually have loans now that are called asset depletions. They take however many assets you have in cash, divided by 360 months, that becomes your income. And you can qualify off of your assets. Even though you're not receiving anything, you can qualify for a loan. They have bank statement loans. Show me 1 or 2 years worth of bank statements. And it's not like the old bank statements. We're not inflating them. They don't combine them. Show me what you're getting, whether it's personal or business. We count that as income, and it works.
So I just got this text in. So what is the minimum credit rating that you should have?
That's a good question.
Well,
yeah, good question.
Depending on what kind of loan you want. FHA will go down to 540.
Okay.
You're going to pay a higher rate. It's going to be a little bit more difficult to qualify because the risk is higher.
Okay.
But normally you're anywhere between a 620 and a 640 is about the minimum on a conforming loan and forward. FHA is designed for 580, 600, 620. Get you those.
So if you're in
rates
the seven, if somebody out there listening, they've got a low 700, mid 700s, they're in pretty good shape.
They're in very good shape.
They can typically get done, and as long as they've got the income to debt ratio and all the rest of the things, they're in pretty good shape.
Yeah, I have a lender that treats you the same as whether you got a 680 or a 740. They give you the same rate.
Doesn't matter to them because you're in that range where they know that
you got to pay your bills. But yeah, that's where they fit.
So let's say you've been struggling. What's the lowest credit score?
The lowest I've done is 540, and I did it about 2 months ago.
Okay. Now, a 540
didn't mean the person didn't pay their bills.
No, you just have had some struggles in the past, probably, right?
Some struggles in the past. You got some credit cards that are all maxed out. There's some things we can do to show you how to fix that.
Okay.
But when you look at it, it's not like you are continually not making your payments on time. You had a speed bump. You fixed it. You're working to make it better.
And you know what? That's one thing we should just mention real quick, too, as well. And we're going to have somebody joining us here in the very near future that will actually help fix credit. So that's a company that's going to join us. In fact, we're going to interview them next Friday, I believe, Dan, is when they're going to come on air with us. We're going to start them in 1st of December. So here, actually, Friday, they're going to start advertising with us. So they actually do some credit counseling, help you get things dialed in and so on. And I am one that says, before you try to fix it yourself, either call somebody like Kurt, use a credit counseling service, whatever, because there are little things that most people don't know you should do when it comes to fixing your credit that in some cases, to me, make no sense, Kurt.
They don't make sense to me, and I'm in the industry. Seriously, they just don't, but it's the way that the system
honestly,
works.
they just don't make sense. It's like, wait a minute, time out. That is not, common sense would not have told me do that.
No.
But that's,
common sense tells me if I
doesn't
pay my
apply to
bills
credit
on time,
scores,
I'm
right?
okay. Huh?
Common sense doesn't necessarily apply to credit scores, does it?
Common sense is not very common in the credit reporting agency. That's the easiest way.
That's
I
a
can
nice
say it.
way
It's
to
just
say it.
That's honest.
That's a nice way to say it.
good.
No, and I mean that in sincerity, folks. Really, if you think, well, I'll just fix my credit score myself. I'll go pull a report. First of all, something else we should mention: what you're pulling online may not even be what your mortgage company is going to try to look at to qualify you, right?
Exactly right. It's not even close.
Because it's a different type of credit score,
It's a
right?
retail credit score that is general. It's not specific for whether it's a car loan, a mortgage loan, or a credit card.
Which they're all different, right?
And
Or
they-
buying
all
furniture.
three of them are different.
Buying that washer and dryer is way different than buying a house.
That's correct.
Right?
They look at different things. They score completely differently.
Okay. And those are all things that you can help with, right?
I do it all the time. I'm seriously 3 or 4 times a month. I'm working people to get their scores better to help them save money, because the difference between a 674 and a 700 could be $5,000 in fees that I have to charge because of the rate, simply because of those scores.
That's where this other
That's
company
huge.
that we're going to dovetail into with
and
will actually
they'll help
be an
you out with
aid
that.
to Kurt, because what they'll do is Kurt will say, wait a minute, rather than me going through this brain damage, go call, I should know their name, but I apologize, Dan, I don't. Credit Restoration Services, I want to say, is something along those lines. Professional Credit Restoration, I believe, is what the name of the company is. So we'll get all that dialed in. Don't worry. There'll be commercials. I'll handle all that and so on. But believe me, that's what will happen. Kurt will say, go call them. Let's get your credit fixed.
And you're correct. The people should, if they're thinking about it and they can improve their score a little bit, get with a credit counselor, or get with me. We'll kind of give you some ideas. You shouldn't have to pay for just the ideas.
Professional Credit Restoration.
Okay, okay. One last quick question from another text message: divorced or married? Does it matter?
Oh, good question.
Divorced or married? What?
Divorced or married? Does it matter in trying to get a loan?
No.
All comes down to money and credit score.
Yeah.
Income and credit score.
That's a violation. You can't ask somebody if they're married.
Oh.
Or divorce, for that
Or
matter.
divorce, you can't, because it has nothing to do with it.
Now, if the
That's a
divorce
HUMDA
screwed up your
requirement.
credit and you're in the low 500s because of it, now that's a different situation.
Okay.
And if it comes across that when you put down that you are divorced, then they're going to ask for the documentation for liabilities. But no, it doesn't matter.
Make sense?
Yeah, it makes sense.
Okay. All right. We'll take another time out. And Kurt, it's always good having you.
Thank you very much.
Really appreciate it. It's always good stuff. Now, one quick thing, too. USGoldCoin.com. What Andy Goss will tell you is that if you really want to do things correctly, you should max out the mortgage on your house. Call Kurt. Get the highest mortgage you possibly can, because everything Kurt just said in regards to how cheap the money is, it's doubtful you'll ever get it that cheap again in the future.
I don't disagree with that at all.
So
don't put yourself in a financial bind, but
no.
get as much as you can.
Get as much as you can, and if you can invest that money into the proper instrument that will actually give you more money back, i.e., take that money, go buy a rental house, go buy that duplex, go do something else with the money that will generate you more income, you should be calling Kurt today to make that happen. So, U.S. Gold Coin, they'll talk to you about precious metals, gold, silver, things like that. It's usgoldcoins.com, 1-800-468-2646. Tell them Rush to Reason sent you.
On September 13th of 2017, Congress decided to raise the national debt ceiling and issued almost $600 billion in bonds. This means every dollar in the world will be worth a little less, while everything else will be a little more expensive. It's called inflation, and there is very little we can do to stop it. This is scheduled to happen again in December. If the government can only make $600 billion last for 3 months, how are we supposed to expect them to keep our economy afloat forever? There is something you can do about the rising tide of inflation. Andy Goss from usgoldcoins.com wants to teach you how to protect yourself against inflation by collecting valuable gold and silver coins. That's why, as a KLZ listener, Andy's offering to give you his 3 CDs, The Federal Reserve, The Definition of Money, and How to Protect Your Wealth, all for free. All you have to do is go to usgoldcoins.com or call 800-468-2646 and mention KLZ. Stem the tide of inflation and secure your future with real, authentic, and very valuable U.S. coins by calling Andy Goss at 800-468-2646. That's 800-468-2646 today.
All right, hey, and if you're thinking about doing a move, something along those lines, but you've got things around the house that need fixed, Grandma's Handyman can help you with that. In fact, I would get your house in the best condition possible because that's what brings the highest dollar value. 303-693-3003. There's a senior discount, 1-year warranty on every job. It's grandmashandyman.com, and tell them Rush to Reason sent you.
Grandma's Handyman Service specializes in home maintenance and repairs. All of our technicians are regular employees of Grandma's Handyman Service and are bonded, insured, and have passed a national background check. Grandma's Handyman has been helping Coloradans do the little jobs that need to get done for 13 years. And we serve the metro area, from Arvada to Castle Pines and Lakewood through Aurora. We're in the business of helping people. We offer a 1-year warranty for our work and a senior discount. Don't leave your projects undone for another day. Call Grandma's Handyman to set up an appointment at 303-693-3003. That's 303-693-3003. Or find us online at grandmashandyman.com.
Stay up to date with Rush to Reason after the show on Twitter at Rush to Reason and on Facebook.com/Rush to Reason.
All right, Rush to Reason, Denver's Afternoon Rush, KLZ 560. Kurt's still with us because we need to do a little disclaimer, and I should also say this. Kurt Rogers, if you need him, 720-895-0500. All you got to do is take a quick phone call. He'll take care of you, or you can find him at aimortgage.net. Now, you wanted to also finish up with our equity talk a moment ago.
And I'm not saying take all your equity, but what is the rate of return you're getting on the equity in your house? If you have a house where you owe 100 and it's worth 500,
zero.
How much is that 400,000 making you?
None.
Not a dollar.
Sitting there doing nothing.
Take a couple 100,000 and make 6 to 8 to 10% because it's definitely available.
Yeah, and again, and we've talked about this. We've even had callers call in and kind of dispute us in this. And in what we had a caller the other day, and Dan, you remember this. So we had a caller call in and very respectful, and I appreciated the phone call. And he was like, well, wait a minute, isn't being debt-free a really good thing to do? And my answer back was, because he was debt-free. And he was arguing that why would I go get a mortgage if I'm debt-free? And my comment back to him was, if you've been studious enough to be debt-free and have your mortgage paid off, you're the kind of guy that could get a mortgage, invest that money in something else, and do it all over again and have a lot more wealth than you have now.
Without a
Correct?
doubt. Without a doubt, because if you're paying, let's say 4.5%, and it's tax deductible, and you can get 6 to 7, pretty much guaranteed, tax free.
Why would you not do that?
It's free money. You're letting the equity of your house go to waste because it's not helping you. Not again. Don't overextend, but there's opportunity
in this case, where it's somebody that's paid their house off,
right?
They've been that studious. And again, my suggestion would be that, if you're somebody that can't manage money and you're having a hard time with the mortgage payment you've got now, of course, don't increase anything. That's not the guy that I'm talking to.
Right.
But if you've been that person that's been able to build equity along the line and you've got a substantial chunk of it, maybe your house isn't paid for, but to your point, you've got $300,000-$400,000 sitting there. Why would you not go get another mortgage, a new mortgage, redo what you currently have, and then take some of that money and invest it in something you can make money with?
Right now, and the statistic I checked before I came over, just under 30% of the people that own a home own it free and clear. 30% have no mortgage, getting no rate of return on their money.
Yeah, and if they've been studious enough to have the thing paid off, they're the ones that should be getting a mortgage to invest to make more money with.
Agreed.
That's my point. Now, if rates were at 13, 14, 15%, I wouldn't be having this conversation, although I probably still would be, because in that case, you typically can still get that mortgage and still invest that money and make more, because that's how things work. Michael's got a question for Kurt as well, real quick. Michael, welcome.
Hey, guys. How we doing today?
Doing great.
So, Kurt, I was the one that sent both those questions in. Basically, here's the situation I'm in. I was divorced back in 2015. Had a vehicle that got repoed. I've since fixed that with the divorce papers because it wasn't my responsibility.
Got it.
My score's about, I know, according to Credit Karma, so like I said, it's not the one that you looked at. According to Credit Karma, I've got like a 640 to 680. I have 4 or 5 credit cards, but I kind of had to start over after the divorce, so my credit length of time is only about 6 months. But it is underneath the 30% threshold. And other than that, and the repo, I do have income proof, and it's only gone up over the years, but I've only been at my current job for about 2 months.
What was your previous job? How long did you work there?
About a year.
Okay. You haven't told me anything that wouldn't qualify you for a loan. You're 640 to 680. Your repo does not affect the mortgage. It's already been accounted for in your credit score, so they don't care. Your divorce is gone. We just need to have proof that the divorce is over and you're not paying any alimony. If you are, how it fits to your debt-to-income ratio. You would be able to buy a home, as far as I can see.
What about, I just found out about this today, a former marital account supposedly was never paid off, and I inherited all the marital debt, so I have a bad account with a bank. Is that going to affect it either?
It's going to affect what it is. If it's a mortgage, yes. If it's not a mortgage and the divorce decree says it was her responsibility, there's normally a workaround.
No, it's just it's an old checking account that got put into the hole got put in the hole for a little bit, and it just
that's easily explainable.
Yeah, I've done those plenty of times. Yeah, I've done those plenty of times.
Yeah, and people and most of the financial institutions understand in divorces there's some things like that can slip through the cracks and so on, and they typically don't hold that against you, Michael.
That's
true. Right. I will be.
I'm not a mortgage broker, but I've been through some of that personally, so yeah, I don't think that's a big issue.
Yeah, I do. I've dealt with that many times.
Yeah.
What if I call you? What information do you need?
Great question. This is for everybody else listening, by the way, so this is perfect. Go ahead, Kurt.
I'm going to need your employment for the last year and a half to 2 years. I'm going to need your current address, date of birth,
social, that kind of stuff.
Social, basic stuff like that, and then I can start the process. Take a quick look at your credit report, and I'm not so much looking at the score. I'm looking at those things that you are worried about now and how I can get the bank to say, okay, they're not a big deal. I'm not just looking at score because 640, 680, you fit many programs.
All right. Are some of the programs that, from what I tentatively fit right now, do any of those have help with down payment or closing costs?
Yes.
All right. After the new year, I will definitely be calling you because that's when I'm going to be paying off the rest of that junk.
All right. Awesome. Good stuff, Michael. That's what we want to hear.
Right,
so appreciate the phone call very much.
Michael.
Go ahead, Kurt.
Affordable interest mortgage, 7400 East Arapahoe Road, Suite 109, Centennial, Colorado, 80112. NMLS 298191, regulated by the Division of Real Estate and an equal credit lender.
All right, and up next is Affordable Interest Mortgage. Call Kurt 720-895-0500.